This is Marie Conser. I'm a real estate broker with John L. Scott. Tim?
And I am a senior mortgage advisor with PacRes Mortgage here in Portland, Oregon.
So we wanted to catch you all up on a conversation that Tim and I have been having, and we thought that would be a great video. So here we are chatting about this. So Tim is actually a mortgage advisor because what happens when you're looking to buy a home is when you're looking at your financing, you kind of have to get your financial picture in order for your mortgage advisor to take a look at it and provide you with options, the best potential product for the project at hand. And we were talking about different things or scenarios that come up wherein we can leverage the cash available potentially in a different way in order to get best positioned for a mortgage. So
well said.
We were just talking about, so let's talk about one scenario, for example, where people think they must have 20% down, they saved for that amount of money, and now you're looking at their whole picture and you realize maybe there's a better way of using this cash. So give us a couple of scenarios.
Indeed, yeah, thanks for that opening, because I think a lot of people get some information, from friends and family and internet and so forth, and that may not always be the best strategy. So, for example, again, many people say or think they need to put 20% down, and we have products as low as 0 down, actually, but 3 and 3.5 and 5% down are great options. But the fear, I think, commonly with those wanting to put 20% down is to avoid mortgage insurance. And one thing that's changed very nicely over the years is that mortgage insurance is really tied to credit scores. So if you have a good credit score, we may encourage you to look at a 15% down option, pay a small amount in mortgage insurance, but use your cash to eliminate a really expensive car loan with a $500 or $600 payment. And that's not tax deductible interest. But now you have a higher mortgage with a more interest that is deductible. So, let's look at the overall picture and see if we can strategize to find the best product and strategy to maximize your finances to, maybe get you to your goal of retiring early or
right,
another investment property or whatnot.
Which made me think of a scenario wherein when people do their homework and go to see someone like you and consult and a realtor, and they start preparing and strategizing about their real estate project, they may actually find out that maybe they need to hit pause for a couple of months or maybe 3 months and allocate some of that cash to pay off something like a student loan or some consumer debt of sort, which in 2 or 3 months may raise their credit score, which will give them access maybe to a better rate. So we don't know that, right, until I have a conversation with you. Do you have an example of something like this that happened where the client actually hit pause in order to get in a better position?
I absolutely do. Yeah, a lot of examples. Just this week, as a matter of fact, some people called about buying in the fall of 2022. And I encouraged them to start now. Let's take a look at your financial picture now. Let's pull credit now. Let's see if there are things that we need to do to get you in the perfect position come, October, November of this year. And in their case, they had a few credit cards that were maxed out to the limit. So, what I mean by that is a $5,000 limit with a $5,000 balance. And we're coaching them on getting that paid down to an acceptable level, which will oftentimes have a dramatic effect on their score, 40, 50 points to a score, and sometimes more. I think my record was over 100 points on a credit score. But we can give them some guidance and some knowledge to help them better position themselves so that they're ready when their time to buy comes.
that gives them a better credit score. It can potentially give them more credit limit too, because if they eliminate that monthly payment, that gives them more to borrow, right? I mean,
Absolutely.
more wiggle room. It remains their decision what their budget is at the end, but at least you can provide a bigger range
Mhm.
for the price, right?
Yeah, absolutely. Yeah, let's, give them some advice that for something for them to consider. And oftentimes they've never even heard of these strategies before. And if it works with their budget, great. Sometimes it doesn't, but we want to kind of give a unique twist or idea that they hadn't thought of.
Exactly. And it's not necessarily just when they're buying a house. It also applies when you're currently a homeowner and you're looking at potentially refinancing. I mean, some of the rates were very low right now, but even if the rate is not super low or similar to what you already have, if you have built equity in your home, which with this market with rapid appreciation, pretty much the majority of people, homeowners, have some equity in their home.
Mhm.
They might actually leverage that to pay off a debt.
No question.
Or,
Yeah.
or remodel their home and increase the value of their home, right? I mean, what kind of examples have you seen with your clients?
Yeah. I have a great story from just a few years ago, and I had a gentleman that had some health issues, and so they incurred quite a bit of debt. And they also had a high mortgage rate because they really weren't in a position to refinance some of the older high rates of old. And we came in and, in their case, lowered the rate, but we basically consolidated, I think, close to maybe $90,000 or $100,000 in debt, and we actually saved them $2,500 a month.
Wow.
And what's really cool about that is we have some really wonderful software that shows taking the next step after that. So what can we do with that $2,500? In some cases, if they were to apply that $2,500 to the balance, in their case, they could pay off their loan in a brand new 30-year fixed rate loan. They could pay that off in 11 or 12 years. So it's pretty powerful, some of the things that we can do. And in their case, they elected to set aside 500 of their savings to actually put in savings, and they were using the remaining 2,000 for paying down their mortgage. They were a little bit older. They were kind of getting focused on retirement. So we helped them strategize how to get to that point a little bit quicker than a typical 30-year loan.
So what you're saying is not only they borrowed a little bit more money to get rid of that debt incurred because of health issues, but their monthly payment was actually less than what they had before. And if they kept their monthly payments the same,
Exactly,
it would accelerate the paying off their home completely.
you got it. Exactly. Well said.
Amazing. And I think a lot of people underestimate the power of just having a consultation with someone like you, a mortgage advisor, who is going to look at it. I mean, it's not like, look, if there's nothing better to do, then that's what it is. But you don't know until you actually sit down and take a look at the financial picture.
Indeed. Yeah, and a lot of people are concerned about rates creeping up right now. And but again, another great story is we took today's higher rate, but again, consolidated quite a bit of debt. And people have incurred quite a bit of debt over the past 2 years in particular. We raised their interest rate, but in one example, in the last few months, we saved them about $800 a month because we paid off a bunch of consumer and revolving debt that was really affecting their outgo pretty dramatically, but we actually ended up saving them money. So it was pretty exciting to do that for them.
Yeah, it is very powerful. And I guess what the takeaway here is that you do not consult with a mortgage advisor just when you're planning on buying a house. It can continue to be one of those advisors in your circle, just like you have a financial planner and an estate planner, potentially a realtor for your real estate investments, but having a mortgage advisor to see how you can leverage what you have, your assets, in a better, more effective way.
Indeed.
Yeah, it should not be underestimated for sure. I want to reiterate, when you are looking to buy a home, though, the sooner the better to talk to a mortgage advisor. You touched on that when you were mentioning those clients looking to buy in the fall.
Mhm.
I stress as well that it's so important to start looking now, and not only to understand what kind of budget, instead of using an online calculator, what kind of budget you may qualify for, but also identify potential opportunities for errors in your credit reports, because I'm sure that happens.
No question.
Yep, as well as making that preparation work. If I lower this debt and increase this, then I'll be positioned better in 2 or 3 months, and I'll eventually have better credit score and access to a higher loan.
Mhm. Absolutely. Yeah, absolutely. Love to do that.
Yep. Thank you so much, Tim.
My pleasure. It's always a pleasure to talk to you, Marie, and look forward to communicating with you soon.
Thank you. Take care.
Bye-bye.